So why did the RBA hold the cash rate? I want to go into a bit more details. It's like, I like this analogy where it's like you're trying to lose weight. You just drop the easy kilos in the beginning and then...
I wouldn't know what you're talking about, but I'm sorry, I'm looking at you, but...
You know how it is? You're like, you lose like, oh yeah, I'll drop 3-4 kilos in the first week and then mate, good luck dropping the rest. Yeah, so you just need to stay at it. But unfortunately, it's the households that feel the pinch and feel that high because everything's expensive at this stage and it's mainly consumers and households pay for it. So there's that lag effect, which also takes place. So if the RBA cuts rates today, it's going to take 6 to 12 months for that to reflect in the market, for mortgages to drop down, spending to go up a bit, and then welcome back to the Brokers Lounge. As usual, Eddie and Carlo here. And this week, we're going to be talking about the latest RBA meeting and the decision on the interest rate and how is that related to the market and a bit of update on the economic conditions, what's happening in Australia and a bit of overseas. And as always, before we start, Carlo, how you going?
I'm doing very well, thank you.
Oh, I love that.
Yes, the sun is starting to come out a little bit more. Everyone's feeling a little bit more alive. We're into that spring marketing
Blossoming.
Yeah, it's good time of the year, but geez, it's got 3 months at the end of the year, which is very scary to a certain degree. Is what was like, wow, when we got the email the other day from our ops manager saying there's less than 100 days to Christmas. There was that realization is like this year's has just gone by from us very quickly. But
absolutely.
Looking forward to it. So
that's it. Should we dig into it?
Yes, definitely. Let's get into it.
All right.
A bit to unravel.
So cash rate, we had the RBA meet this week and they decided to leave the cash rate unchanged.
This is where we go, boo.
I'm actually like,
I
think it's good.
It was expected.
It's very expected, and I think it's good. Like you don't want to overstimulate the economy, the market.
There was always that balancing act, wasn't it?
Yeah,
in terms of
and
making sure not doing too much too soon.
Exactly. So, cash rate is still at 3.6%. The last cut we had was back in August.
Yep.
And the first cut, which we had seen in a very long time, was in Feb this year. So we had 3 rate cuts, Feb, May, August.
Mm-hmm.
Each cut was at 0.25% basis points. So we're down to 0.7, down by 0.75% from 4.35.
Mm-hmm.
So that's a decent cut so far this year. So in perspective, $1 million loan, 0.75%, that's like $7,500 a year, which is decent. So they're still keeping things in check. They don't want to overcut and stimulate the economy more than they should.
Mm-hmm.
So inflation, the target, RBA's target is 2 to 3%. So the headline inflation is 3%, while the core is at 2.6. So it's very close to the range. I think it's within that reach now.
Yeah.
So it's just down from the dangerous levels that we had in the past. Like we had a 7+% inflation a couple of years ago. So it's down quite a bit, even though we can feel the pinch, but it's still where
it's amazing how the market reacts very quickly or very erratically to whenever there's a slight spike in inflation. Like it's been heading in the right direction for a while, but the minute we got one quarter where it went up slightly from the previous quarter, it was like, oh my God, what's happening here? But like you said, it's still within the range.
Yeah, there's the sticky part to it, which we can get to later on.
Will be though.
But labour market is tight as well. So unemployment at 4.2%, which is still historically low compared to the average before COVID was 5 to 6%. So that means a tight labour market is like having too many people chasing too few jobs. So pretty much employers have to pay more to attract staff because there isn't much people looking for work out there. So it's great for workers, but it pushes up costs for businesses, and in turn, guess who's paying the price? We are, as consumers. So yeah, all these have led to RBA keeping rates uncut this meeting.
And then you got some other factors that you can throw into it as well. First one is obviously GDP growth, which is what they carefully look at as well. Our last quarterly growth was at 0.6%, which had annual growth just above 2%. So it's probably at that nice jogging pace, and it's not running, it's not walking, it's just at a nice steady pace. It's not overheating, which is probably the main thing as well. But on the flip side, it's not collapsing either.
Yeah.
So, I think we've probably got it at a decent level. I think one of the things that we've seen, one of the biggest things probably impacted is consumer spending. Obviously, which has helped bring down inflation numbers. But the retailers, I think, are definitely doing a lot tougher than others out there. I know some very big retail firms out there who, they've got good quality businesses. They're still humming along, but they're really getting hit now. They're starting to really feel the pinch. Like we say, it's always a lag effect when inflation starts to creep up and rates are up at the high level. There's always that lag effect. So, so families definitely tightening the belts as mortgage costs were hiking along the way as well. In terms of the housing market, I think it's still quite resilient. The prices are quite resilient. Cities like Sydney, Brisbane, Perth. I think Melbourne's probably starting to see a little bit of a rebound as well now. So we deal a lot with buyers agents, and we've seen that shift from getting out of that Victorian market, heading up to Queensland or in Adelaide, and then Adelaide became too expensive. And now we're starting to see a lot of our clients purchasing properties in Victoria. Now, it may not be metropolitan Melbourne, but some of the regional centres. So
I feel pinch myself every time I see Victoria as
it was like, is that a misprint?
Wow, okay, refreshing, good.
Yeah,
good.
Yeah, exactly right. But vacancy rates are still under 1%, so rents are still rising. So that's very important to note as well.
I can vouch for that. As you know, I'm looking for a rental property, and mate, there isn't much out there, and it's bloody expensive what you pay compared to what you get. So
yeah. I think we use the analogy. It's like a game of musical chairs. There's not enough chairs for everyone. So
yes, exactly,
the competition is absolutely fierce at the moment.
100%. You might have to kick the next one coming to sit on that chair,
take them out before they get to the. Fair enough.
No violence. We'll try and out pay him. All right. So why did the RBA hold, if we want to go into a bit more detail? So we touched on inflation previously. So yes, it's within reach, but it's still not quite there. And it's mainly services inflation that's affecting the higher inflation. And it's usually the health, education, and hospitality. So it's like, I like this analogy where it's like you're trying to lose weight. You just drop the easy kilos in the beginning, and then
I wouldn't know what you're talking about, but
sorry, I'm looking at you, but you know how it is. You lose I'll drop 3-4 kilos in the first week, and then mate, good luck dropping the rest.
Yeah, longer term, it's a lot harder to maintain.
So you just need to stay at it, but unfortunately, it's the households that feel the pinch and feel that high, because everything's expensive at this stage, and it's mainly consumers and households pay for it. So there's that lag effect, which also takes place. So if the RBA cuts rates today, it's going to take 6 to 12 months for that to reflect in the market, for mortgages to drop down, spending to go up a bit, and then hopefully prices on other things drop down as well, because there's also so many other factors that affect it. And obviously globally, which we can touch on in a minute, that also affects the prices and inflation. So it takes a bit of time for things to adjust. And unfortunately, people or services or businesses that put their prices up are not going to put their prices down very soon. It takes time for that correction to happen.
Yeah.
We touched on labor market, very tight. So that pushes wages up, and inflation obviously stays up because there's more money people getting paid, and businesses have to pay for higher wages, so they have to keep their prices up. So it's that balancing act, like you said before, between the household and the GDP. How do you keep the economy going, but without crushing the households? I don't they are overly concerned on and how not to crush households, because a lot of households are being crushed and you don't see much happening in that space. It's mainly, I guess that's the problem. Like businesses are just passing on that cost to consumers, and there's no like filter in between. It's like, yep, that's our cost. There you go. That's our cost. There you go. And businesses are having it hard, especially small businesses.
Yeah.
And it's not easy.
The RBA are very cognizant of making sure that there is still some level of growth in the business sector, so that don't slow things down too much.
Yeah.
You don't want, yes, you want the consumers to slow down their spending a little bit to keep the inflation intact, but not to the point where then it starts to affect businesses. Like you said, they start putting up prices, and before you know it, you've got a real mismatch of where you want things to actually be. So I think it's probably, I actually think we're in a good place at the moment.
We are. Like, I think we're at a good place from an economy point of view. Households are still having it hard. Like mortgages are less, but all services are still very expensive. Everyday stuff is still very expensive.
Yeah.
So yeah, that's where you need just things to cool down a bit, where people can start spending on discretionary things again. Like now it's just sticking into essentials mainly. So
yeah, it's when you got the essentials that are where the costs are increasing. Like you talked about earlier on health. Everyone needs to be able to, fund health costs, but those costs are just going through the roof at the moment.
Yeah.
And even if you've got health insurance, I don't know if you've got health insurance, but every time I look at mine, there's another price rise coming through. Before you know it, I'm paying over $600 a month in health insurance.
And you barely use it. It's like barely use it. It's time to get sick.
And you suddenly go, can I just get sick just to use it a little bit, please? Well, not as, but
just take my gold ladder out.
Exactly right.
Just take something out, use it. Probably the last bit would be like the global risks, and obviously there's a lot happening globally. Like we'd love to think we live on an island and we just want to stick to our own bubble, but the world does not work like that. So you've got China, whatever's happening there in terms of slowing down or speeding up the US interest rates, the US economy, that highly affects what happens here. Oil, what happens with oil prices, and countries that control oil supply, that highly affects everything, because oil price affects the price of your everyday goods. And obviously, not to mention all the conflicts happening and the wars happening, those also affects things. So yeah, there's a bit happening. So bottom line is just one step at a time, slow, cautious steps from the RBA, which is highly commended.
Yeah, look, I think we've been critical at times of the RBA and how they deal with things, but I think it's what we've seen in the past 4 to 6 months has actually probably been quite a measured approach that they've been running with. So, and I think it's starting to pay off. Interesting you mentioned about the oil. It's probably something that, in the past, the price of oil was really volatile. You used to see swings in our petrol pump prices quite regularly, and a lot of it was based off
every week.
The exchange rate, how the Aussie dollar was going against the US to the oil price. But I think we've seen a bit of a stability, and that's the bit that worries me a little bit as well, because we have had a lot of stability, but there's a lot of stuff going on overseas. And like I said, it involves a lot of countries that do control the oil as well, which gives me a bit of concern as well. It's like, we won't take much before we know, and we could be paying $2.50 at a pump. Who knows? So, but yeah, that's those global risks still just seem to linger around.
No, it's never ending, man.
Yeah, it's never ending, right? So, and I think in terms of the global risk, the whole China slowdown is a big thing for Australia, because if they slow down, there's less demand on Australian exports, which means we got weaker growth in our country as well. We are heavily reliant on what China does. So, if you look at your biggest customer in a business, for Australia, China is our biggest customer. So if we start to see slow, it's like we are. I think we're just too heavily concentrated on exports to one particular country. So we've got to be very mindful of that. You mentioned earlier on around the interest rates in the US. The US Federal Reserve are looking to obviously cut rates as well. And the issue will be is if they do cut rates, do they do it too soon?
Yeah,
They've got a pretty interesting past history of passing on rates in big amounts or too quickly. So we'll be interested to see how that works.
they've got a lot of issues there to deal with anyway. Like, I don't know, is the government still shut there? Like they had been.
That literally, I must have been living on another planet because I didn't even see it hit our news, and all of a sudden I'm going through my phone. I think last time the night before, and it's like the US government has shut its offices. They've run out of money, and I went, US just normally just keeps printing money, don't they? That's how they normally operate. They're just like, no, we'll just keep going. So
Yep.
it's very interesting, and it's unfortunately for Australia, the US has always been one of those countries where if they sneeze, we catch pneumonia. So it does worry us, that's for sure. So, even looking back to the oil prices as well, if we do continue to see these conflicts happen and we see oil prices continue to rise, it has a big flow-on effect, not just to us when we're filling up at the 𝗵𝗲𝗀, but it's also for everyday things of buying groceries because
transport costs
and all built in as well. So everything that happens from an oil point of view will have a massive flow-on effect. We talked about the geopolitical tensions across the world. There's lots. The Ukraine, the Middle East, the South China Sea. There's just so much volatility going on at the moment. So all this is not to scare everyone here in Australia, but we've just got to be mindful of that. Like you said, we live in a nice big island separated from the rest of the world, but we do get impacted by what is happening over there, and we may not see it physically. We can watch the news every night and see what's going on and sit back and go, oh, it doesn't bother us. We're going to be okay. Yes, from a safety point of view, we're okay, but everything has that big flow-on effect. So, supply chains, everything. So want to keep watch over the next few months, and hopefully some of the governments out there come to their senses.
You do.
We won't have it. I'm wishful thinking.
Yeah, I think the only way they can come to their senses is just nuke everybody. They nuke themselves and just get done with it already. Like that slow burn. It's like, I don't know.
It's like paying fast money first.
It doesn't bother me. It doesn't bother me. It's like whatever happens, happens. So if we just took the scenic route around the globe, and then we come back to and what it means for borrowers. So no cut, obviously, then there's no further payment relief for mortgage holders. So you just gotta hold there, but there's plenty of refinancing opportunities which we've been seeing over the last few weeks. So I see the market shifted in the last few weeks. A lot of new first home buyers. Obviously, the 5% guarantee, government guarantee scheme kicked off. That has been there for years. So it's not like new. I see a lot of media coverage on it as if it's a new thing. It's been there for years. The only thing that has changed is they lifted the caps on incomes and purchase prices. So it's just allowed more people to participate in it, but it has been there for 2-3 years already. So lots of refinances. A lot of people as well have the opportunity now to refinance. We're seeing lower interest rates. A lot of people who were in the mortgage prison, what's so-called mortgage prison, are able to refinance now to much better rates. Fixed versus variable. There's actually some good fixed rates over 2 years, like around the 4.8, but still a lot of people are choosing the variable option because they expect rates to drop even further. So
that's an interesting one, isn't it? Because we've always, well, not always, but recently everyone shied away from fixed rates because there wasn't much to gain out of it, and we were in an environment where variable rates were falling. But if we're looking at maybe one more rate cut this year in say November, then maybe one more in February next year, that's 0.5% in total. If you're looking at variable versus fixed at the moment, you've probably got a 0.5% gap between
on 2 years.
On 2 years. So people have now got to start thinking to themselves, well, do I lock myself in maybe for part of my debt because if rates, we might get 2 more rate cuts, and who knows after that what's going to happen. Now, if they stay on hold for another year or so, then people could actually see themselves benefiting by going to a fixed rate contract now and benefiting from it straight away. But there's obviously the flexibility of or lack of flexibility with a fixed rate loan as well.
It's going to leave a small portion, but yeah, it makes sense now for fixing part.
Yeah.
So yeah, well, what about investors?
Yeah, I think the main thing is obviously with rates moving down, even though they're on hold at the moment, the rental yields are still quite strong. You know, we're seeing rental yields across various investment properties of 4.5, even 5%, which is pretty decent when you're only paying an interest rate of say 5.5 to 5.75%. So, which also means that, and vacancy rates are obviously at record lows as well. So the supply is still quite tight out there, and developers are still holding back. I think they're still waiting to see what's going to happen. You know, because as a developer, you've got material costs still exorbitantly high. So they probably need to see, you know, their margins are just being cut back massively. It's like boo-hoo because they made good money in the past. So, but you know, for investors out there, if you're in a good financial position and you can get financing, you know, you really set yourself up now for future growth. So, yeah, all in all, I think it's still quite positive from an investor point of view.
Yeah, well, finishing last quarter of the year, I guess there's a few things to look out for. I'm slightly optimistic about this quarter and what's coming, like how things are shaping. Looks markets are possibly betting on a cut for November.
Yep.
So depending on inflation and how it comes in for the third quarter. So yeah, these are things that the RBA will keep watching moving forward. Inflation, unemployment, and spending, how consumers are spending, and if spending is increasing on just undiscretionary items. So we'll see how that works out. But as always, don't wait for what the RBA does or what the economy does or what the global markets does or what happens in I don't know where. You always do your own plan, act on it, and there's always room for opportunities. There's always room to do something. You just have to be across what your personal situation is. So waiting for the RBA to cut before reviewing your loan is like waiting for summer before fixing your aircon. I like that one.
Oh, that's a good one. I like that one. Yeah.
By the time you act, it might be too late. So
It'll be too late. Yeah.
And that's what literally happens. Like everyone's got their aircon not working and it's cold. It's like, I'm not going to use it. And then it's 40 degrees and everyone's calling because I've got a mate who works in aircons and it's like every time people are like, I need it fixed today. Yeah. So.
And then they're saying, sorry, well, on my next availability in 3 months' time.
And I'll charge you, I'll charge you 3 times.
Yeah,
exactly. So act soon. Yeah, act soon and have a plan in place if you're planning on doing buying or refinancing or restructuring. So, yeah.
Yeah. Look, I think to summarize before we finish up, look, the RBA's move to pause on any rate cuts I think is a very good cautious move. There's that balancing act of, you know, inflation against household pain, making sure that we've got that nice balancing act going on. We don't see it as a sign of weakness, that's for sure. I think it's more so a case that they're watching very carefully. It's that watch and act, for summertime bushfires, watch and act. So
flooding.
But yeah, like I said, I think we've been a bit critical of the RBA, but I think they're doing a good job at the moment in just keeping an eye on things and being a little bit cautious and making sure that things don't get out of control again. So, which is the main thing.
And yeah, remember, even if the RBA doesn't move, banks still do. There's still some good offers. We can see some competition brewing up, which potentially would be, very positive for consumers looking to refinance or restructure. So that's where brokers come in, and that's where you can always rely on us to see if you're best positioned with what you've got or you're ready to make that next move. So whether you're looking to buy or refinance or just have any general questions, we're always available to take these on. That would be it for today. thank you for listening, watching, and as usual, please feel free to reach out and don't forget to leave us a review. And until next time,
Stars.
5, yes, 5, please. Until next time, take care of yourselves and we'll see you soon. Bye-bye, everyone. Bye.
Disclaimer: the information contained in this podcast is general in nature and does not take into account your personal circumstances. Head to the show notes if you want to book a free call to discuss your personal situation.